We think going into 2022, there's a couple of themes, most of them continuing from 2021, that are going to be very important for investors to pay attention to. Probably the first and the one that's getting the most attention these days is the inflation narrative. As everybody knows, we ended 2021 with inflation in the upper 6% range, inflation measured by the Consumer Price Index. And while we don't think 2022 will see numbers quite like that, we do believe we're going to continue to see inflation be a very important topic for the year. The primary reason for that is simply there's still a lot of supply chain issues that are out there that are causing price increases. There is a fight going on for good labor that is causing certain wage inflation, especially in service industries and certain other industries where they're hiring what I would call more minimum wage type employees. We're seeing that really kind of get pushed up as people fight for those employees. Ultimately, that shows up in inflation eventually through price increases if people have to pay their employees more. So we think the inflation narrative is going to continue to be out there in 2022. And the question is, how much does it impact the market on a good or bad way? We don't really know the answer to that. And I'll never try to predict that because it usually, I think you're going to find out most people will predict it wrong. In addition to inflation, and really kind of going hand in hand with inflation is, what does the Federal Reserve do in 2022 to help keep inflation intact, but at the same time keep the economy running smoothly? So we all know now that the Fed got it wrong on inflation last year. They thought inflation was going to be transitory. It wasn't. And now they're reacting very quickly to help try to control inflation. They are cutting down the stimulus that they're putting out into the marketplace through the printing of new currency each and every month. It's dropped quite a bit over the course of the last 3 or 4 months. And we're now starting to see talks about interest rate increases starting as early as March of this year. Just a few short months ago, there was talk of interest rate rises interest rate increases at the end of 2022. Now we've pushed that forward into the first quarter. And they're talking about 4 interest rate increases now during 2022. So we'll see how that plays out. Now, why are interest rate increases important? Well, as the amount of money you can make on a bond portfolio go up or in cash go up, it makes those investment classes much more attractive as an investor, and it might take some money out of the stock market, right? In addition, as interest rates go up, it's one of the factors that people use to discount cash flows in an asset that they're going to purchase, whether it be a piece of real estate, whether it be a company that they're going to purchase. And the higher the interest rate you use to value that company, the lower the valuation you're going to give that company and pay for it. So you may see potential asset prices adjust in 2022. We don't really know how that's going to actually play out as we look at the stock markets. However, we do expect to see continued strong economic growth in 2022. You still have supply chain issues that are being resolved. You have an infrastructure program that was put in place or voted into place late last year. There's about $1 billion of spending over the course of the next few years. So that's the government continuing to spend money above and beyond its normal budget process. So that money gets out there in the economy and helps stimulate the economy. You have the consumer that continues to be in a very strong financial position, which should all help lead to fairly decent economic growth in 2022. 2022 economically could end up being as good a year, if not better, from an economic growth standpoint as 2021. But again, I'm not necessarily sitting here trying to predict that, but we're certainly set up for a pretty good year in 2022. Now, I say all that, and I'll throw out the caveat, of course, that anything could disrupt that. We could have a new variant of COVID-19 come out that forces us into a shutdown. You could have some geopolitical events that are out there escalate and cause certain consumer fears that might lead to a slowdown in economic activity. So not only is the consumer in very good shape, and when I say consumer is in good shape, they have cash on hand, asset prices have gone up, so they have assets that they can move from investment into spending, but their debt levels are relatively low compared to historical norms. So the consumer is in very good shape, but corporate America is also in very good shape. Corporate profits last year, basically, we don't certainly have the fourth quarter numbers in, but they're projected to be significantly above pre-pandemic levels. So the corporations are making very good money. They have very strong balance sheets right now. And we have a lot of corporations that have announced some pretty big projects that will occur in the United States during 2022. A lot of it in reaction to a lot of the supply chain disruption we had last year. For instance, one of the largest chip manufacturers, computer chip manufacturers in the marketplace has announced a pretty significant plant build in the United States so that they, in the future, do not have to rely on chips coming from foreign countries or emerging markets. So not all that money will get spent in 2022. The builds will start. So we'll start to see some of that, which I think should be very good. In addition, I fully expect that some portion of the Build Back Better program will come out. As everybody knows, that was a political hot potato in the fourth quarter last year, in a very divided Congress and Senate. Nothing could get approved. But I do think at some point, something's going to come out of that. What it looks like, I'm not even going to try to predict. But that will be further stimulus for the economy. We just don't know what areas of the economy. So that will be the positive side of that. The negative side of that will be is it will bring about some tax changes. Just a little anecdotal or funny story. A few months ago, I filmed a video on all the tax proposals that were in the Build Back Better program. That video never even made it for public viewing because by the time it was done being produced, every single portion of the tax law increases that were talked about were basically null and void. So I won't even try to sit here and predict what's going to be in there going forward. We really don't know, and we're going to have to wait and see. We know they're talking about changes to the estate tax laws. We know they're talking about changes to the tax rates that are assessed to the highest individual earners of the country. But at the end of the day, we just don't know where that's going to all play out, so we're not going to try to predict it. From a stock market investor standpoint, 2021 was pretty good. It was smooth. We all made money. It was very good. 2022, I do expect that'll be a bumpier ride for a number of reasons. Number one, the last 18 months have been really just kind of an unimpeded roller coaster ride up. Roller coaster might not be the right term. Yes, there have been certain corrections happening inside the market that the average investor hasn't seen, but for the most part, it's been moving along pretty smoothly. I do think there are going to be some bumps in the road that come up in 2022. Just some, the market normally goes through a correction phase every now and then. I think the statistics are that the market will have a 10% correction almost every single year. It's not quite that high, but it's pretty close. It has a 30% correction. I think it's every 36 months or every 3 years or so. So we had that correction in 2020. So I don't think we're going to see a correction like that. I'm not trying to project anything, but I don't think it's going to be that big. But I certainly think to see some minor pullbacks at some point during the year would not surprise me in the least bit. So to wrap that up, there are a lot of signs pointing to 2022 being a very good year economically. Corporate America should do well. The Average U.S. consumer should do well. Whether the stock markets follow that, only time will tell.